After the S&P 500 made a new all-time high 4850, it's becoming very hard to find any value or any stocks in the market that have yet to go up, or they have been sitting pretty close to 52-week close, as a lot of the value stocks have been catching up to the growth stocks, into this rally, a lot of the railroad stocks and many others, so it's been very, very hard. But I have a stock for you today that a lot of you have asked me about, and I think it's presenting a decent buying opportunity. And it could be a value trap. I mean, this stock has been flat for a few years right now. And this is a stock called MO, which is Altria. I don't personally own it. I did talk about BTI before, British American Tobacco, as it's more internationally diversified. I said it's a little bit better than Altria, but Altria is starting to get to a very interesting level, and I'm going to share with you a trade idea that I would do on Altria, mainly with options if I had to buy it. This is normally not something that I do in my videos, but I'm going to try something new here and give you a trade idea at the end of the video, and you could let me know if you enjoy these kind of things and if you'd like to see more of them. But Altria is sitting at $40 per share. Latest earnings report wasn't really the best in the world. The smokable products, which is mainly Marlboro for them, most of you are familiar with the brand, has declined 11.6% in volume in the United States. I mean, this is very, very bad, driven by an industry decline rate. It's declining bad. So you're buying a stock in a declining industry, and it's very hard to make money whenever you're buying something in a declining industry, because most of the returns is normally from EPS growth, revenue growth, things like that. But there's something a little bit different with Altria, and I did it with BTI, and I'm going to share it with you. But 11.6% decrease in volume, it's really bad. So Altria is trying to diversify in different growing industries. I talked about their acquisition of Enjoy. They are still working on the distribution stuff within the convenience stores and within their ecosystem channel. So it's still growing, but it needs a little bit of time to show up in the numbers. So they do have Enjoy, which I believe they overpaid for, but it's been going well so far. And they also have the oral tobacco category. Mainly their brand is On. This is the name. It's just the name is On. And they've been growing volume around 5%. Again, nothing crazy. The On revenue is around, shipments is around 28% volume increase. So this is a growing category with them. But the oral tobacco category overall did decline around 3% in volume. So all their volumes are declining. Things are looking bad. I believe they missed by 2.5%, and they tightened their full 2023 guidance range. Now they expect the growth rate between 1.5% to 3%. So 1.5% to 3% is still not bad at all. If you look at where this company is priced in, it's priced in like it's going to experience a massive decline, which is still possible. So we can see that there's not much revenue growth within Altria or MO. And if you're buying Altria, you're mainly buying it for the dividend, I would assume. I would assume that you're a dividend investor looking for a stable yield, which is why I'm going to analyze the safety of the dividend of MO, and then I'm going to get into my trade idea for the stock if I had to buy it. But the yield is pretty close to 10%, 10% dividend yield. Now the question is this yield safe, or will it likely be cut? Now, if we look at the free cash flow is expected to be around $8.5 billion for 2024. Then it's going to decline a little bit to 7.9 in 2025 and 7.3 in 2026. But we're going to take the $8.5 billion of free cash flow. The company is paying out around $6.5 billion of dividends, which would leave us with around $2 billion of free cash flow after the dividend to service the debt or do buybacks and many other things. Now, if we look at the debt of Altria, they do have a lot of debt, pretty close to $24 billion worth of debt. And if we look at the maturity of the debt, it's spread out very widely, anywhere between a 2.3% interest rate, sometimes they have 10.2%, all the way due to 2061. So this is a very long period, but they do have some maturities, and those maturities are not anything crazy. They're like 1.1 billion in 2024, 1.5 in 2025, 1.5 in 2026, and over $20 billion is due way after 2027, all the way to 2061. So I personally believe that with Altria having $2 billion of extra free cash flow, even if they have $1.5 billion and the free cash flow declines, they still have enough free cash flow to pay the liabilities, and they also have some cash, and they also have some equity investments and stuff they can sell or do things with. So I like the balance sheet of Altria. And for me personally, looking at all these numbers, I think the dividend is safe because $2 billion of extra free cash flow. I think the $9 billion dividend is safe unless something crazy happens or some crazy law happened and then Altria sales drop down 20, 30, or 40%, which is unlikely. But for me, looking at these numbers, I think the 10% dividend is not a trap, and I think it's safe for now. Now, in terms of the total return, what I would normally do is I would look at the company in general. And if the company is not growing, I would try to value it on a free cash flow yield. And the free cash flow yield for Altria is around 11.7%. So I would expect Altria to return around 11.7% return annually if I don't have any EPS growth or free cash flow growth, and if I don't have any multiple expansion or contraction. But I'm not going to use that in the video because the free cash flow might decline. I'm just going to use the dividend as a return. And the dividend, we talked about it, it's around pretty close to 10%. So we just take the 10% number. Now this is the trick. Once you have stocks like BTI, like MO, like Verizon, stocks that are predictable, stocks that are not growing too much, and they have a pretty predictable pattern. They tend to stay flat, up or down 5%. These stocks are the perfect stocks to sell covered calls on. Yes, they do offer a much lower return. Like if you sell covered calls on Palantir, you're going to get a much higher return on those calls. But again, you're limiting your upside with a stock that has a lot of upside. So I would never sell covered calls on a growth stock like Palantir or HIMS or Tesla. I would never do that. I love selling covered calls on these kind of companies that are predictable and I can pretty much be sure that they are not going anywhere. And what I would do with something like MO, I would sell the basic January 2025 4250 covered calls. And most of you, I believe, know what a covered call is. If not, I mean, you could look it up on YouTube or whatever, or you could join my own group where we do a lot of options live. We buy and sell options. Most people don't do that. I do that live, and I try to show people what I do. But 4250 covered call, which is going to yield around $1.45, which is $145 for every 100 shares. And that would be around a 3.5% return if you buy, 100 shares of Altria 4000 with $1.45. This is around a 3.5% return. So with the 3.5% from the covered call and the 10% dividend, you're getting 13.5% annual return on Altria, plus you could have potential, a price appreciation. If Altria ever gets to 4250, this is 5.5% on the upside. So in total, you could be making 18.5% annual return with something like Altria that's dead, that people say you shouldn't buy it, and all these kind of things. Now you might tell me, well, what if the stock keeps going down? Well, if the stock does keep going down, then this covered calls that you sold, and if the stock goes to 38, then it's going to be cheaper, and you can buy it back for cheaper, collect the difference between the credit and the debit of the call, and then you can get the money and then do it again. And then you could get an extra 1 to 2% annual with the 9-10% dividend. This is still 10 to 12%. So for me, this is what I did with BTI, British American Tobacco, and I would do the same thing with MO if I had to do it. I'm sorry if I wasn't too clear in the video. I don't really know how to make tutorials. I'm more of someone that just does it live and just show people what I do. And this is why I have my own group if you're interested. And this is my video on Altria. It was not financial advice. It could be a value trap, but it looks undervalued. And this is what I would do if I had to do it. So I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I hope to see you in another video.